Welcome to Wealth Matters Podcast. I have with me Logan Freeman today. Logan is an ex-NFL player and he has completed multiple joint venture projects, equity partnership, and works as a developer. And I'm very, very excited because I have never had a sports person on my podcast.
All
Welcome,
right.
Logan.
Thank you for having me. I'm so excited to be here.
Yeah, you can tell I'm very excited.
Yeah, me too. Me too.
So, Logan, tell us something interesting about yourself.
Oh, man. I will say this. I grew up in the capital of Missouri. And if you guys don't know what that is, think back way back to geography class. And Missouri is this little state in the middle of the United States that you guys usually just fly over,
Right.
going to New York or something like that. But the capital of Missouri is Jefferson City, Missouri. My first job was baling hay, picking up hay bales and putting them on the back of a trailer. So there's something interesting
Oh
about
my
me.
God. So from baling hay to NFL to a
There we
real
go.
estate magnate now.
That's right. Yes,
that, that,
absolutely.
that's a great journey. So did you find real estate while you were in the NFL or was it after?
It was after, actually. So, when I was finishing up my master's program, after I was cut from the NFL, is the moment that I really started to kind of work on personal and professional development. And so I had an hour drive to the job that I was going to. And old Zig Ziglar, he mentioned that you need to make your classroom your car the classroom on wheels.
Right.
Yes. So I started watching or listening to podcasts, listening to Audible and books. And that's where I was introduced to this concept of real estate investing. And so that's where I started to learn about it. I would listen to Matt Theriault way back when,
Right.
and John Lee Dumas and Lewis
Oh yeah,
Howes.
JLD.
Yeah. So, he just connected with me on LinkedIn. So I'm curious if he's going to have me on his podcast. I don't know. We'll see.
Yeah, let me know.
I will. I'll
But
get
so
you on too.
yeah, I would love to. So what kind of master's program?
It's a business administration.
Okay,
Yep.
wow. So a sports person with a brain with brains, that's amazing, right?
Yeah. Well, I was an offensive lineman. And so if you follow football at all, if you're a center on the offensive line, you have to be pretty cerebral and you have to be able
Right.
to know a lot of things. You're kind of an extension of the quarterback. You just, hand the ball off and say, go do something good with it. Yeah.
So how and when did you figure out real estate is the way to go?
I think that when I moved to Kansas City, after I was cut from the NFL, I had a decision to make, right? I had a decision to say, okay, am I going to rent or am I going to buy? And thankfully, I had read Rich Dad, Poor Dad. I had read Gary Keller's The Millionaire's Real Estate Investor.
Yep.
So I started to understand this stuff. And so I actually bought a house, from all that money that I saved up from baling all of that hay since I was 14 years old. I bought a house here in Kansas City, and I bought a fixer-upper in a good area of town where I was able to get a conventional loan on it. I moved in. I got a roommate who paid the mortgage, basically, and then I started adding some value through construction on the property. And in 2 years, I sold that property, and I made more on that, the profit off of that property than I was making at my W-2 job. And it was tax-free because I had lived in it for 2
Right.
years.
It's a primary residence. So if you live in your primary residence for 2 years out of the last 5 years, you
That's
can,
right.
when you sell it, you can write off up to 250,000 if you're a single earner, and if you're married and filing jointly, you just need to make sure means you can write off up to $500,000. So that goes a long way.
It definitely does. And so I think that was kind of the first real experience that I had to say, wow, there's something here. And so I just continued to educate myself and try to learn about real estate after that.
Awesome. So, and when did you decide that you want to go full time into real estate?
So, I worked in Kansas City from 2013 to about 2016 or 17. And I had been doing a little bit more real estate investing on the side. Nothing really, nothing really at scale, but I did do a couple more projects. And one of my buddies had been building a real estate investment company here for out-of-state investors. And in 2016, the end of 2016, I was fired from my job. And so when I was fired, that's the day that I said, okay, I'm not going to go work for anybody else, and I'm going to focus on building a company that I can have control of. And my wife was fully behind me. She said, hey, check your, I called her. I said, sweetie, I just got fired. And she said, check your email whenever you get home. I said, okay. So I checked my email, and she had already started the LLC and the articles of organization
And
of,
that is amazing.
yes. So had the support of my wife from day one, which is really, really important, I think. And so that's the day that we started LiveFree Investments and what we're doing today. So that's kind of when I went, full time into the real estate investing world.
So, I see this, it's so common with all the entrepreneurs that getting fired is the best thing that can happen to
Yes.
you, right? It happened to me 2009 when market was crashing. I
Wow.
worked at a big four consulting firm
Yep.
doing IT consulting, and I was let go. My wife was expecting, she was due in 3 months with our first child,
Oh my
and I was
gosh.
devastated. But within a month, while I was looking for a job and I was just trying to figure out what I should do, I
Sure.
decided that I'm not working for anyone anymore.
Yep.
So it's been 11 years
That's
since I
awesome.
started my own IT consulting firm and now the real estate. But yeah, that was a blessing in disguise.
Yeah, I would say the same thing for me. I'm a real stubborn guy, and so I knew I needed to make a change, but I had just been married. I
Yeah.
wanted to try to get a little nest egg kind of saved up,
Yes,
but
exactly.
I think life had a different path for me, and so it
Sometimes you
was.
need to get kicked.
That's right. I got kicked to the curb, man.
Yeah. So, and why did you decide to jump into real estate only, right? There are so many other
Yeah.
businesses. You could have just done stock trading on side,
Yep.
or you could have built something else, let's say a startup. Why real estate was the way to go?
Yes. And I think it was kind of a twofold kind of scenario. One was I had that connection that I had been doing some real estate properties and smaller projects on the
Right.
side
Okay.
for some time. So he was a good mentor for me. And his company had just the year before been the Kansas City's fastest growing company. And we were just kind
Nice.
of hanging out and connecting. So that was one reason. So he had a bug in my ear. And then the second reason was that I was watching where Kansas City was going. I was watching people move back downtown. There was cranes everywhere. Houses and neighborhoods were getting fixed up. People were flipping homes. And I'm like, man, it really feels like there's a pipeline of capital coming from out of state into Kansas City. And before that gets too hot, I'd like to get involved in it. So I did a
Right.
little bit of, research on the market itself. And I said, I think it's a perfect time to go work with my buddy who already had the real estate company, because Kansas City was positioned to do really well over the next 10 to 15 years. And thankfully I did.
So, what was the process when you decided that, yes, I'm already doing real estate part time? Did you go through a formal education or did you just work with the mentor? What was the process?
So I got licensed as an
Okay.
agent here in
Okay.
Kansas City.
Realtor.
So,
Yeah, okay.
yep. So I went on as the head of acquisitions for a $50 million fund here in
Okay.
Kansas City. And in about 10 months, we completed over 100 transactions. And so that was, a really great time for me to learn the ropes of how to find off-market deals, how to build an investor list, how to work with folks that don't live in Kansas City, how to negotiate projects and estimate rehabs. And so I got over 400 reps on going to these different properties and how to negotiate, how to make the offers in the right way. So the transition for me was, to go from basically a W-2 job. I started a consulting business at this time as well, actually. So I was doing
Great
sales.
idea.
Yeah, I was doing sales consulting, I was doing over 10 transactions a month as well on the real estate side. So very busy. But 6 months into that, my wife really said, hey, I'm really impressed with what you've been able to accomplish, but you really need to focus. And she's very strategic, and I love her for that. And so she said, all you do is complain about the consulting, and all you do is talk about the real estate. So why don't you pick real estate and go deep instead of trying to be so wide? And I said, you know what? I will. So I dissolved the consulting business. It took a couple months, and the fund stopped buying real estate. And so I actually took the money that I had made from all those transactions, and I started to buy real estate myself.
That's awesome. And did you have enough money to start buying into real estate, or how did you figure that out?
Yeah. So I did it two ways. I did a couple. So I'm a firm believer that I can't really, I can't transact, sell, or be a part of something that I haven't done myself. I have to really believe in
Right.
something, right? I have to believe in it. And so I went and bought a couple properties myself, and then I moved my license from that boutique single family and small multifamily firm over to a commercial and multifamily brokerage. And so after I bought the properties, moved my license, I jumped into syndicating deals just right off the bat. And
Oh,
so
wow.
I start, in less than 3 months, I had syndicated 2 properties here in Kansas City. So that's kind of how the transition went.
So, can you describe your journey to entrepreneurship? Because now I could understand that you went from NFL to sales career to real estate. So, what was going through your mind while you are while you were trying to become or start your own business on real
Yeah.
estate side?
Well, I had been reading books, and one of them that's really, really important to me to this day is a guy named M.J. DeMarco. He read, he
Oh,
wrote,
yes.
he wrote a book called The Millionaire's Fast Lane, and then also a book called Unscripted. And I have this theory and this feeling and passion inside of me that people are suppressed. And what I mean by that is they're not working towards something that enlightens them and lifts them up on a regular basis. And they're just making that choice because that's what was fed to us for so long. And so for me, it was important to have freedom of my choice, freedom of my time, and freedom to work on something that I believed in fully that was going to leave a lasting impact on my community and my family. And so I felt that ever since I started working for somebody else. And so I had been reading all these books, making some plans, and whenever I was fired, I knew that that was the right time to actually go execute on everything that I had been reading and planning for. So it was this real big passion inside of me that was, and this fire that was burning inside of me to try to help other people elevate themselves, but also realize that they can make choices that will, impact their lives for the long haul. They don't have to just listen to what has been fed to us for so many years.
So this is amazing. So what I heard was, if you get fired, don't be feared. Don't listen to what's been fed, and think about freedom.
That's right. I
All
mean,
the
you're already free. I have to tell you, when I was fired, that drive home, that was the lightest I had been in a long time.
right.
I felt like, my gosh, I've got my time, I've got opportunities. Sure, there's a little bit of scarcity, where you're like, where am I going to make money from? But I was like, I'm going to figure that out because I'll work towards it. But man, that feeling, I don't know how to describe it. Maybe you felt it, maybe you didn't because you were getting ready to have your first
Yeah, no,
child, which
I was scared to death.
yes. But my wife was, at a great job. She was making money. We were
Yeah,
fine financially. So I had this freedom, this newfound
right.
love and zest for life that said, okay, it's time to go do something that you actually enjoy doing.
No, this is awesome. And when you talk about freedom, I can relate, right? Because as an entrepreneur, it's not about financial freedom. I don't think of it that way, but it's flexibility, right? Freedom of
Yes,
doing whatever you want with your time, right?
that's right.
Because you have so much flexibility, and as well the freedom to work on something which you are passionate about, right?
Yes,
It's not just that you are working on something which you have been asked to, even though you don't like it or you don't care about it, right?
right.
So no,
Yes.
I love it. This is great. So do you talk to other NFL players as well as other sports persons about real estate? Because I see that not just NFL, lots of these sports people, they
Yep.
make a lot of money, and by the
Right.
time they are done with the sport, they are usually bankrupt or they're
Sure.
struggling, right?
Yes.
So of course, they have spent millions or maybe more on buying mansions and whatnot for themselves, but they never think about real estate as
Right.
investment, right? So do you talk to these sports people?
I do. Yeah, I have a lot of connections still actually in the NBA, the MLB, and in the NFL. And so, it's really interesting because, that industry is so what I'll call, there's such a high barrier of entry to get into connecting with those folks because the teams that they work or they work for, yeah, the teams that they work for, they have these kind of circles that they put these
Right.
players into, right? And so unless you get into some of those circles with the financial advisor, with the CPA, with the wealth planner, whatever it is, it's
Right.
really difficult to get them to think about real estate. Now, we've had a few actually reach out to us actively, proactively, and say, hey, we would love to kind of, diversify into commercial real estate. We do not have time to necessarily look for properties, but we want it to be big enough and we want it to be cool enough that it would make a lot of sense for us. So we haven't really, necessarily transacted anything with any professional athletes yet, but we've got this pipeline of probably about 8 to 12 guys now that we've been kind of talking with. And it almost seems like there might be an interesting vertical to kind of, gear or market towards and create kind of like a business plan that just goes towards those professional athletes. So we've been toying with that here at in Kansas City right now.
Yeah, it's so much needed, right? Because they give, I would say 10, 15 years of their lives. And after that, they can't do most or any of the physical like sports activity, right? So they got to have some kind of, setup where they could just retire into it, right?
That's
so
right.
I believe, if you start something like that, I'm pretty sure you'll be very successful. So
Yes.
how does the conversation go with those sports people, right? How do you start, and what kind of discussions do you have?
Yeah. I mean, well, we talk a lot about, since I can relate a little bit being an athlete, we talk about how right now, hey, I'm not sure the season's going to even happen.
Right.
So these guys are, I mean, the MLB, the NFL, I mean, they're all like, I'm not sure we're going to, and a lot of these guys get paid, for the games that they play,
exactly.
And so there's a lot of uncertainty around that right now as well. So that's been most of our conversations recently, is talking through that. But I'm always just taking an education approach, right? Like, hey, you got a big sign-on bonus, go buy your car, go buy your, whatever, that's fine. But make sure you have a portion of it that's going to actually create wealth on your balance sheet. And a lot of these folks, they just don't understand the definition of wealth and income, right? I mean,
right.
there's a big disparity because, income is fickle, money can come in and can go out really, really quickly. But if you're buying some sort of asset that's going to be income producing and you don't have to manage it, it's always going to be there. That's just been more of an education kind of, I would say, component. So I'm always sending them resources, podcasts to listen to while they're working out. I'm just saying, hey, just start thinking about this because, you're not going to be able to play athletics your whole life. Like that's not, you're not going to be able to do that. And so I think that there's some people that are more receptive to it. I would say a lot of them put, again, their faith in their financial advisors. And we all know that financial advisors do not like real estate guys, right? I mean, that's typically, because
they don't know anything.
Well, and they don't get paid fees.
Right. Yeah, exactly. Means even if you gain or lose, you get, they get paid, right?
That's right. So there are a few firms out there that get paid in a different way, right? They get paid for their time and not necessarily their fee based on what they're doing. And so those are the guys that we kind of really target, the registered investment advisors, some of these other folks that are more invested in real estate themselves. My financial planner specifically is a real estate investor as well. And so there's folks that are open to it out there. But again, unless you get to that level of where the team is providing these resources for these young guys, you're typically not going to have that conversation. And they're like, oh yeah, well, somebody's, managing that for me. And it's like, well, probably not actually. So it's each case is very specific, but it's more or less just trying to take an education approach and make sure that they're making decisions that will help them when they can't play football or they get injured or something along those natures.
So hey, can you tell us about your first deal, the syndication? You mentioned you were able to do a couple of deals. So what was going through your mind when you started syndicating on that deal, and what were the numbers, etc.?
Yeah. So get this, my first syndication was on a bed and breakfast hotel.
Oh my God. Okay.
So I had never raised money before. I had no experience with hotels and I had no track record. So it was about $1.25 million on the capital raise,
Okay.
So not
wow.
huge,
That's still pretty sizable. Yeah. For your first deal.
For your first deal to go have to raise that much. And then not only that, it's not multifamily. It's not a mobile home
and no track record.
No track record. So I really put myself up against the wall a little bit, but what I did have was I partnered up with some really great experienced people, and we had just hired as a chief operating officer, a gentleman who was running a portion of Ritz-Carlton's brand. So that
Oh,
really
okay.
helped us with the credibility piece of the operations of the property. But it's well positioned, it's in a great location, and it's beautiful. So that helped out too. But the property was on the Kansas City Country Club Plaza, which is a really nice area of town. I think we have 15 rooms over there. So we had a big renovation because we were taking the carriage house and the garage and actually making a couple more units. So we had
Oh,
some
okay.
renovation component to it. Obviously during COVID, it hasn't been the best for hotel and hospitality, but
Yes.
these are really positioned nicely because you can have small weddings there. You get a very service-based approach. It's very high touch. So we have businesses that send their very important people there, their
Oh,
VIPs.
okay.
Yeah, so it's kind of an interesting niche inside of the hospitality world. But the things that I learned on that deal was, I went through the full private placement memorandum. I went through the full, whole process of raising capital that way, obviously the right way. But man, I grossly underestimated the time that it was going to take to get documents ready, to talk
Oh,
with
yes.
investors, to actually raise the capital, to get soft commits, actually to commit to the capital, right? I mean,
Yes.
it took probably 3 or 4 more weeks than I originally thought that it would to get that deal done because it was my first time doing it. Going back, I'm so grateful that I had some good mentors that were helping me during that process, and I did a lot of the legwork. But I cannot believe that the first deal that I ever did was a bed and breakfast hotel. And by the way, during our due diligence period of that one, I went and bought another one. So we have
Oh,
2.
wow.
Yeah. So, but I'm the type of guy that I put myself in scenarios where, I have to figure it out. I know I have good people around me, but it's just going to take a lot of work. So I learned a lot on that deal.
That's awesome. So, can you have you gone through a full cycle on a deal?
We have, yeah, we've
Okay.
gone full cycle on some smaller deals here in Kansas City. We started only buying the commercial and multifamily properties about 3 years ago. So a lot of them
Okay.
are just kind of in the
Right.
stabilization period right now, actually. So we're on the syndication side, a little bit less involved on where the cycle is of the properties. We're up to about 550 units now here in Kansas City, and we should be probably close to 1,000 by the end of the year. But again, I mean, we just started in 2017, the end of 2016 to 2017, to kind of this growth trajectory. So
That's amazing. Yeah,
yeah.
I have not
So
heard of.
my partners that I have on the business have over 5,000 units in 7 states, and they've taken 50 different projects full cycle. So they're very, very confident in what they're doing. But this new business model with us 3 new principals, that's kind of a newer venture for us.
Got it. So, can you talk about your best deal so far?
Well, I think that my best deal is yet to come. How about that?
Okay.
Yeah. So I would say my best deal was my first deal, which was not a deal that I syndicated. It was a deal that I bought
Right.
just with one investor. We did a joint venture, and the reason it was the best deal is because I made it happen. There was a situation. There was some, I had to figure it out. I had to put myself in the pressure to actually get the deal done. I had to put my own dollars where my mouth was. And I learned so much by doing that all by myself. And so it might not be the best deal from a returns, criteria. And it's a mixed use asset that has retail component, has a bagel shop in the bottom level, and then it has 2 short-term rentals up top. So it's Airbnb property as well in a really cool area of Kansas City. But I say that because it was the first deal that I ever did that was not necessarily something I was doing solely myself with my own money, and it was not something that I was just brokering. So it was the best deal because it opened my eyes to the possibilities of being able to think bigger.
That's awesome. And what was your worst deal so far?
Oh, my worst deal. So my worst deal is one that I actually just sold my interests back to our investors on. And so it was a big failure for me.
Uh-oh.
Um, And so this was an off-market property. It's a 12,000 square foot commercial building in the heart of the crossroads in Kansas City, Missouri, which is a beautiful area, gentrifying. I always follow the artists and the musicians in the city, and that's where all of them were living. And so I sat down with this old lady, and she was obviously on her last leg. I mean, cigarette never came out of her mouth, but she owned this awesome building in this area. And I sat down, I could just see the possibilities of this property. And what I did wrong on this deal was I tried to do it all. And what I mean by that is I tried to wear too many hats. I tried to be the real estate agent, the owner, the leasing agent, the general contractor, the operations manager, all of it. I tried to do everything myself, and I just ran myself rampant. And then at the time too, my business really took off. So all the time that I had beforehand really went, gone. And so at the end of the day, the deal will be fine. But me having to relinquish my ownership in the deal, take a loss on the time and the money that I put into that deal, it really brought me to tears. And my wife had to comfort me a little bit. So I think everybody's probably got those scars, but I'm so glad that I went through that scar personally with my own deal than I did with, a bunch of our investors' money. So I learned a lot of hard lessons on the deals that I've done myself.
That's a great point, right? So even, my very first deal, I lost almost everything I had put in, right? But it's good to, get educated that way on your own dime than, losing someone else's, hard and sweat money, right? So
yeah,
I
absolutely.
agree. So let's take a quick break, Logan, and we'll be back after the break. We'll go through the fire round. Welcome back to Wealth Matters Podcast. I'm talking to Logan Freeman. He's the ex-NFL agent who has turned into a real estate entrepreneur. Welcome back, Logan. Are you ready for the fire round?
I've never been more ready in my life. Let's light this thing up.
Let's do it. So what is the one advice you would like to give to my listeners?
I would say put yourself around people that are smarter than you and more successful than you. Peer groups, the proximity principle is so important. And I remember whenever I was graduating from my master's program, all of my collegiate friends that were still, kind of doing the same thing that we were doing in college, going to the bars, drinking the beers, getting drunk, chasing after girls. And I had this feeling that I just didn't fit in anymore because I had elevated myself mentally and physically to the next level. And so I started to put myself around folks that were focused on personal and professional development. They were trying to live a good life, and they were making big moves in the marketplace. So change your peer group and you change your life.
That's a great advice. And usually I don't interrupt during the fire round. But the one thing, I think I read this in the book as well, that you don't want to be the smartest man in the room.
Right. That's right.
That means you are hanging out with the wrong people.
Yes, it does. And right now, you are the smartest man in the room. So you're hanging out with the wrong people, my man.
Yes, that's true. No, I got Logan with me. I'm not worried. So the next question, would you be changing any business or investment strategy after coronavirus?
You know what? I'll have to tell you, I'll share some numbers with you guys. So we've closed on 3 transactions in the last 45 days, totaling over $12 million. And we've put 5 other properties under contract. And so, yes, so I mean, which is going to total close to $49 million in real estate. And so I've taken this time to really, really think about the vulnerabilities that I had in my business beforehand and solving those. So I'm a big fan of Grant Cardone, not necessarily his real estate, but his 10X mentality book is unbelievable.
Yes.
And so he says to never waste a good recession. And so I have been taking this time, doubling down on marketing, figuring out systems and processes on the back end, solidifying my business relationship with 2 other principals here in Kansas City, and telling everybody that we're in the marketplace to buy. And that has been a game changer for me. So I don't know if it's changed my investment thesis, but it helped us build a real company behind what we were doing.
Favorite real estate or finance or any other related book?
I'm going to have to say a book that you maybe have not heard of or read about, but if you read or watched the recent Michael Jordan miniseries on ESPN, right? The guy that's training Michael Jordan in there, his name is Tim S. Grover. And Tim Grover, He wrote a book called Relentless. And Relentless is all about these guys that have this next level. He calls regular people who are comfortable being comfortable cleaners.
Mm-hmm.
Closers, they get the deal done, but nothing else. Cleaners, they are the top 1% of the people that get it done 99% of the time. You don't have to tell them what to do, and they're going to deliver the result, and they're not going to know how they did it. Michael Jordan, cleaner. Kobe Bryant, cleaner. Dwayne Wade, cleaner.
Oh,
All
okay.
of these guys are cleaners. Charles Barkley, cleaner. Lots of CEOs today are cleaners. But I have figured out a way to understand the 3 different levels and look at each areas of my life to say, okay, I'm a cooler right here, but I'm a cleaner right there. Do I need to make some changes in my life? So it's called Relentless by Tim S. Grover.
Okay, I got to buy that book. I
It's
have not
wonderful.
heard of it. I have to.
It's great.
Any tool or website you recommend?
LinkedIn, baby. I have built more business off of LinkedIn. It is the next platform to just go gangbusters. If it hasn't already, I'm not really
Right.
sure. But if you're not interacting on LinkedIn on a daily basis, then you're not really focused on using digital marketing and social media to your biggest advantage. You know, the average user on LinkedIn makes over $75,000 a month, and I think
Right.
42% of the LinkedIn users have a bachelor's degree. So my type of clientele, buyers, sellers, passive investors, they're all on LinkedIn. You just have to go find them and add value to it. So LinkedIn is a website that I couldn't live without.
Thank you for that recommendation. How do you give back?
Oh man, this is a favorite one of mine. So, you know, everybody looks about how hard charging I am in the business world, but nobody really hears about what I'm doing on the side or kind of in the background. And what I'm doing is helping to end homelessness here in Kansas City. I'm very passionate about caring for the sick, feeding the hungry, housing the homeless, and really focusing on the folks that don't have the same advantages that maybe I or some other people do in the city. And so I sit on the board of directors of a nonprofit organization here called Restart. And Restart's mission is to end homelessness through providing affordable housing, which I can then go buy commercial real estate properties and put the clientele in those properties. They lease it from me, but they also give them the services that they need to stay out off of the streets and in their businesses and providing for their families. So that's the way that I'm giving back here in Kansas City.
That's great. How can my listeners reach out to you?
Well, I mentioned LinkedIn before. I'm very active there. LinkedIn is a wonderful place to find me. Logan Freeman. I post daily, probably 3 to 4 times. But my website as well is LiveFreeInvestments.com.
Awesome. I will put that in the show notes. Thank you
Thank you
so
so
much,
much.
Logan. I had fun chatting with you.
I had a blast as well. Thanks for having me on.
Absolutely. Take care.